Hello, this is Kirill from forexboat.com and welcome back to the course on testing and optimization in MetaTrader 4. In today's tutorial, we will wrap up the practical section of the course. There are 5 main areas relating to testing and optimization of Forex Robot in preparation to launch it on a large-scale real account. And today I wanted to briefly touch on each of them and give you 3 main points for each one that you could take away from this course for your own future testing and optimizations. So the main 5 areas are optimization and backtesting, forward tests, demo tests, real tests, and rolling optimization. So let's have a look at each one of them in more detail. Optimization and backtesting. This bit was the first part that we did in this section, and as you remember, we optimized our expert advisor. We had so many different sets of parameters that we couldn't even look through them or through all of them, so we had to pick out the ones that we liked the most. So the main 3 key takeaways here are that the more sets you pick out from this part of the preparation process, the better, because then you'll be able to filter them out and pick out just the best ones out of the ones you pick now. Of course, the more sets you pick, the more work you'll have to do, but it also increases your choice and likelihood of picking out a really good set. Also, don't forget to check the results on the graph. So once you've got the optimization results, don't just look for the highest profit or the lowest drawdown. Also make sure that you always run the back test for each one of the ones that you want to pick out and look at the graph, because the graph will tell you much more than the stats can, and will help you pick out the sets that you're actually comfortable with. And finally, be creative. Remember how we picked out our sets? We weren't only looking for the highest profit. We looked at the highest profit, and then we tried to mix up the different types of start hours, and we looked for low drawdowns. So don't be afraid to dive deep into your optimization results and see what you can find there. Forward tests. 3 main key takeaways here are: avoid curve fitting. So the forward test is designed to help you to avoid curve fitting. You optimize on, for example, 3 months, and then you use the next month of your historical data to run a forward test, and that helps you make sure that you're not just fitting your expert advisor to make profit on that particular period of time where you ran the optimization. The forward test is like an additional verification process to make sure that you've avoided curve fitting. And as you recall, we did have results that were good on the optimization or the backtest, but were very poor on those tests performed very poorly on the forward test, and we concluded that they were curve fitting sets, and we had to get rid of them. Next, eliminate duplicates. If you have very similar sets that have similar balance graphs in their backtests, then you wouldn't probably want to move on with both of those sets onto your demo test, because they will be will have similar results. Like, remember, we had 2 sets that had the starting hour 9. Their results were very similar. So that means that you're kind of doubling your risks if you launch both of them on a real account, because they will probably have drawdowns at the same time, and that means your account will have a double drawdown. So try to eliminate those in the forward test. And finally, be generous. Forward test is not a stage of your preparation process where you would want to eliminate as many sets as you can. No, you just want to eliminate the duplicate ones and the ones that are obviously curve fitted. The rest you can move on to the demo test and see how they go there. So as long as the set kind of holds its own during the forward test, as long as it's not rapidly losing money, you might want to move that one to a demo test and see how it performs there. Demo test, 3 main key takeaways. Length depends on system, and that's a very valid point, that if you're running an expert advisor on the 15-minute chart, then you might even have like 5 trades per day, and say 1 week of tests will give you 25 trades, and that might be sufficient for you. Or 2 weeks of trades will give you 50 2 weeks of testing will give you 50 trades, and that can be sufficient for you to evaluate this particular set. Whereas if you're expert advisor running on the hourly chart like we had, or even on the daily chart, then you can have as low as a couple of trades a week, and then you would need to run your test for a month or two on the demo account just to be able to have sufficient a sufficient number of observations to eliminate or approve a certain set. So it really depends on the system, but my general advice is that don't run a demo test for less than a week, because you at least want to see how your expert advisor behaves in different market conditions that occur through the daily cycle of night and day, and when markets open and close, and also how it works on different days of the week, like closer to the weekend and in the midweek and so on. Generally also don't run the demo test for too long, because sometimes, especially with a shorter period or expert advisors working on shorter time frames, you will notice that the market conditions can change, and that will, like if you're running demo test for a month, then what was at the start of the month and what is at the end, or if you're running for like 3 months, what is at the end of your demo test period, the market can actually be different, and your expert advisor set might start underperforming by then. So it's your judgment call how long to run your test. Don't run it for less than a week, and don't run it for too long. That will allow the market to change. Run multiple tests simultaneously. As you saw, we ran 4 demo tests at the same time. Very convenient because it's more efficient. You can run up to 8, 10, as many as you want, because that way you are actually you can compare them between each other, and you're more efficient in the sense that you don't have to, if a demo test fails, if a set is underperforming, you don't have to restart the whole thing with a different set. You already have the other sets running, so you can just get rid of the underperforming sets along the way, and at the end you'll have the best performing ones. And be strict. Anything that comes out of the demo test is going on your real mini account or a small real account for further testing, and that's actually already real money. And you don't want to be fooling around with sets that you know that aren't profitable. So if something's underperforming on demo test, get rid of it. Don't even try taking it to the next step. Real test. So it's a real mini test. You have to do this for every broker and account type. So whenever you change a broker, or you change even the account type within one broker, you have to first of all check your back test and forward test like we did, just to make sure that they are more or less aligned with what you saw on the demo account. And also you need to run this mini real test because the real market conditions can be very different to what you were used to on your previous broker on account type, and that can impact your profitability of your expert advisor, and you don't want to uncover that on a large scale real account. You want to see, if that is the case, you want to see it on a small account so that your losses are minimized. And just on that as well, trading is always risky, and especially trading with expert advisors is a risky process. But by doing all of these steps, by doing optimizations, forward tests, back tests, and demo tests, and mini real account tests, you are performing a due diligence process. You are making sure that you're undergoing all of the steps that you can possibly undergo to minimize your risks, and that way you're filtering out the sets for your expert advisor that are unprofitable and that are that can impact negatively your account. That way you kind of, by going through this due diligence process, you are making sure that you've done everything you possibly could, and that way you're minimizing the risks substantially, and also you've got a clear conscience that there is a very low likelihood of something going on. There still is, because it's a risky process, trading, but at least you've done everything you could. So just make sure you do go through this, through all of these steps every time you change a broker or an account type. Parallel testing. That is something that we saw in this section of the course. That's when you run your real test in parallel to your demo test, and that is actually a good thing, because you can compare as they go, and you can see where the discrepancies are in real time. You can see that on your demo tests certain trades are being opened, and on your real test they're not, and that can maybe give you extra ideas of why it's happening, and maybe raise some red flags about this real account, or on the other hand, you'll see that everything's very similar, and that means everything should be good. And finally, in your real test, don't just be strict, be very picky and ruthless about the results. If something's underperforming on your real test, do not take it to the next level, to the large scale real account. If you're not happy with something, even in the slightest manner, I would advise against taking it further, because when you take something to a large scale real account, the game is on. You are trading big money, and especially if that's not your money, you don't want systems that you're not confident in trading there. You always have to have a clear conscience, and you have to be able to say to yourself that you've done the due diligence process and that you're happy with the systems that are trading, and that will help you sleep better at night when your Forex robots are making money for you. And finally, rolling optimization. So this is something that we haven't discussed yet. The main concept behind it is that nothing lasts forever. There is no expert advisor, no set out there in the world that will always make money. The markets are always changing. The markets are dynamic. Conditions are changing. Governments are changing their regulations, doing interventions. Everything is changing all the time. So you have to constantly adapt to the market. Your systems, you have to adapt your trading systems to the market. And in a nutshell, that means that you want to make sure that while your expert advisors are trading on your large-scale real account, in the background, you're still running rerunning optimizations once in a while. Maybe it's once a week, maybe once a month. You rerun your optimization. You see if your set has been performing well, if it's underperforming, if there's a way to improve it, if there's a better set, and so on. So we'll talk in more detail about this in the next section of the course. But that is just something to note, that nothing lasts forever, and you have to be prepared that sooner or later you will have to re-optimize your expert advisors, or maybe even change your expert advisors, or change the sets, and so on. So that's all for today. I hope you enjoyed this section on the practical side of things. I think we achieved some outstanding results with our demo tests and even real tests. And I look forward to seeing you in the next section of the course. Until then, happy trading.